move the markets. Well, is it really? Let me know if you guys can hear me clearly. Let me know if you guys can watch the live stream. Alright, so without further ado, let's get started. So in the last week's video, we were pretty clear. We were expecting a consolidation type of markets. We're not expecting the markets to do much. It was just a back and forth consolidation range between 408 in SPY all the way to 415 to 417. So that was the outlook we had on the last week's recap. So this week, if you go to the weekly charts, we had exactly the same. The markets didn't do much. It was technically an inside week is what we call it. By inside week, what I mean is, look at the size of this last week's candle. This week, we closed within the bounds of that candle on its own. So this is considered in technical terms as inside week. The markets are either bullish or bearish. They're still trying to figure out the direction particularly. So there is no direction yet shown. It's neither bullish nor bearish. I won't be surprised if this continues for quite some time, even with the CPI. So let's talk about CPI. I've been hearing a lot of big deal about it. Oh, CPI is gonna move the markets. Oh, CPI this, CPI that. In reality, it doesn't matter. If you guys noticed, 2 days back, they revised the CPI, which we got last month, to 2 points higher. Last CPI, the market ripped higher because the CPI numbers were technically low when they reported it. And now, once everything is said and done, they just revised it higher. So did the market react? No. I've been telling you, the report which you're gonna get might move the markets regardless, but that report is not credible enough to give any detailed information whatsoever. If you are an investor and if you want to know what the inflation is, well, go to the shop and talk to the owners over there. How do you think these guys get these reports from? You don't need these reports to see where the inflation is. You don't need these types of reports to see how the businesses are doing. Just step outside your house, go to different shops and talk to the owners. They will tell you stories. There is a lot of, I don't want to use the word manipulation. It's the statistics behind the calculation of CPI is so screwed up that it's not trustworthy in the first place. So that's the main reason of it. So if you guys are going to trade through CPI and if you want to gamble through it, I mean, you can go ahead and do it on your own, but it doesn't matter. It doesn't matter what the CPI print is, and a few years later they're going to revise everything and they're going to come out and say, oh, inflation was actually at 10%. We just skewed the calculation, so we showed it at 6%. So it doesn't matter. So we don't trade based on macro. We trade based off of price. We trade based off of charts. So if you're a gambler, I mean, it's your money. You can do whatever you want, but as a good trader, it's not a good sign of a good trader whatsoever. So we have CPI on Thursday. And the revision numbers or whatever, we don't even want to waste time on this. So this is what I need to tell. Don't have too much emphasis on what's going to happen through the report, because at the end, if you want to know what the inflation is, go outside, talk to the business owner. If you want to know how the housing market is, stop looking at the headlines. Talk to people who work in the mortgage industry. Talk to people who actually owns a house, or who's actually renting houses to people, who's actually a landlord. Talk to them. They're going to give you more information than any of these headlines from Bloomberg or CNBC ever will, because they are actually experiencing what's going on the real-time basis, while these cocks just go outside and then get the information from whoever which suits their agenda. So if you want to know macro, go outside to the real world. Talk to multiple people. That's how you know about it. With that being said, let's go to SPY. So this is how the stream is going to go. First, we're going to take a look at SPY and QQQ, and then we're going to take a look at these dollars, gold, silver, yields, and what happened in the bond space. And then you guys can leave your whatever recommendation tickers which you guys are looking for. We'll go over those one after the other. All right. So first things first, we're going to talk about SPY, S&P 500. I already gave a brief introduction at the beginning. It was an inside week. If you guys want to look more into it, I would highly recommend, since I know most of you guys are new to technical analysis, I don't want to bombard you with new terms. I want to keep it as simple as possible, right? So, inside week, that's some new term. If you don't know what it means, look it up, but I'm going to explain it to you anyway. So, this is the weekly candles, weekly time frame. If you have your charts open up, you can follow along. So this is the weekly time frame which we have on SPY. Let me remove all these drawings or whatever. So let's keep the charts clean. So yep, in the weekly time frame, last week you can see the lows of last week was at around 400. The highs was at 418. The opening and closing print of the last week is at 402.80 and 412.35. Look at what happened this week. You see this body of the big green candle? The next week, we are within that body of that candle. So whenever you see candles like this, the last week candle completely engulfs to this week's candle. We are within that price range of 412 all the way to 402. Whenever you see these types of price action happens, we call those inside weeks, which means the market is undecisive. It's not bullish, it's not bearish regardless. So if you're gonna go bet too much on the bear side, or if you're gonna go bet too much on the bullish side, you don't have any clear direction. Why would you do so? So until the market gives the direction, we better wait for the direction and better be bearish, or we better wait for the direction before being bullish. I said the same last week in my weekly forecast video as well. Market is just consolidating. The only problem with this is if they closed above this 410 area, I would have been even more solid on this thesis, but one day of price action doesn't signify a trend change, so they can always recapture the 410. They can always recapture it like on Monday or on Tuesday by using CPI as a reason. It doesn't matter. So 410.38 is important to the upside, 408 is important to the downside. So they're just gonna scoop around here, bit back and forth between these two ranges for a while. If they have a clear breakdown under it, we'll handle it on a real-time basis. But for now, let me bring it back. Here we go. 410, 408. Important to the downside, leading into next week, regardless of what it is. If they recapture 410 on Monday, well, we'll still have a chance to take it all the way up to 415 to 419 after CPI. Again, follow the price, follow the trend, drown the noises. Doesn't matter if it's a CPI, doesn't matter if it's a PPI or whatever it is, the payrolls data, the employment data. If you're a trader who's day trading, who's getting in and out, you don't even need to know any of these. It's like learning all those useless stuff which is not going to help you make any money. I know most of you guys are just day trading, follow the price. At the end of the day, price is the only thing that pays. Macro doesn't. With that being said, let's go over what happened with QQQ. Similar story compared to SPY. Same downtrend, same range bound. If you go to the weekly charts, again another inside week. Nothing much happened. Still about the 293. Still within that range of the last week's candle. Literally, no sign of trend change. Not bullish, not bearish. So with that being said, let's talk about the interiors of the market. So we talk about the price action. So we talk about what to expect. So we don't have any signs. We don't have like any bullish or bearish side of signals from the market. Let's see what we can see by looking at the dollar. Let's see what we can see by looking at the 10-year yields. Let's see what we can see by looking at the bond markets, because they tell a story. They tell a story as a whole, because these bond markets price in everything far before the Fed actually even think about those things. So let's start with Dixie. Dixie is an interesting one. They have been basing for a while. This $100, 101.69. If you go to the daily charts, you can see the base, you can see the failed breakdown to the downside, and now they are pushing up. They're consolidating right now under that resistance area of 103.66. If they break it, well, 105, here we come. One thing about Dixie, the Dixie and S&P 500, if you're trading SPY, you don't have to keep an eye out for Dixie on a candle-to-candle basis. So there is no such correlation like candle to candle basis when compared to Dixie and S&P 500. If you're looking at Dixie, keep an eye out for precious metals like gold. If you're trading gold, if you're a gold head, if you're a silver head, well, you need to keep an eye out for what's going on with the US dollar because precious metals are more correlated to dollar than S&P 500 as a whole. Oh Mario, why is it correlated? It is correlated because I'll tell you, the S&P 500 and Dixie. Think about it. If you run a business who's dealing with accounts in the foreign countries, right? So there's going to be you'll be making money with their currency pair. So if the dollar price goes up and up and up, your profit margins goes lower and lower and lower because the dollar strengthens against their currency. So regardless of how much you make over there, the profit margin are going to show that you are not making that much money as you used to because the dollar is keep pushing higher. So what the market does is they sense the blood beforehand and then they price it in to the individual stocks. That's the narrative why they say that when Dixie goes up, the stocks goes down. It's not something on a day-to-day basis sort of thing. It's just markets pricing in slowing earnings growth into the individual equities. That's why when Dixie went up like crazy for the past few months, like over here, right, from 101 all the way to like 115, you saw weakness in the markets because the markets already know the earnings are going to tank because the dollar is stronger and it's going to affect the profit margin and EPS in a lot of companies like Netflix, Apple, Microsoft, doesn't matter. It's going to have an impact. So that's the theory behind it. Now, Dixie is at strong support again. They based off for a while and now they're bouncing. And if they do recapture 105 again all the way up, there is a theory to have, there is a possibility to have a dead cat bounce because they sold off pretty high, too far, too quick. So it's possible to have a dead cat bounce all the way to 105, all the way to like either 108. We never know. 108 is a possible scenario. So if they go back to 108, the dollar is going to strengthen and you will see some weakness, the market pricing in again a slow in growth and everything, which is already known by now. All or known news. Every single thesis which you see from these macro heads, everything is known. The dollar is going up. You think the market doesn't know that? The dollar was at 122 right now. The highs of the dollar a few days back was at 114 and it dropped all the way down to 101. Where's the all-time highs in S&P 500? As I said, it's not correlated dollar to dollar. It's not correlated point to point, candle to candle. It doesn't work like that. So now, let's take a look at 10-year yields. I know you guys are not big fans of bond markets. I understand that. But now, we got to keep an eye out because that's going to move the markets anyway. Now, similar story. Similar to dollar. Here we go. So, similar to dollar. We have 10-year yields basing out. Oh, just a minute, boys. My dog is moving mad. Are you alright, boy? Yeah, I'm sorry about that. Alright, now, similar to the dollar, 10-year yields are actually... Oh, come on. What's going on with you? It's alright. It's alright. I'm sorry about that, boys. Now, similar to 10-year yields, similar to dollar, the 10-year yields are pushing higher. Something to note. They are based out and now they are rocketing to the upside. The bond markets are pricing in the return of inflation, maybe, we don't know. So it's something to keep an eye out for. If the 10-year keeps pushing higher, they are pricing in higher rates. The Fed is going to keep raising interest rates. You already know what's going to happen by looking at the bond markets because they price in everything you need to know. The Fed is going to follow whatever the bond market does at the end of the day. They can't go against it because going against it is not going to do any favors for anyone because it's not going to change anything. Now, 10-year yields pushing higher. We can go all the way to 4% to the upside. And everything is coming together for a pullback. Maybe markets will use these reasons as a pullback to sell off. February, seasonally speaking, one of the worst days, one of the worst months for the markets as a whole. So when you see all these puzzle pieces coming together, Dixie looking prime to push higher, 10-year yields looking prime to push higher, You have CPI around the corner. Maybe markets will use CPI as a reason to push higher, like push these 10-year yields and Dixie as a like to break out of these resistance ranges to the upside. So these are the things which you need to keep in mind as an investor. So what's going on with the yield space? What's going on with the dollar space? So these things will help you gauge. This is how you deal with macro. When we talk about macro, these are the things which you keep into what the yield space is doing, what the dollar is doing, and what the bonds are pricing in, what the Fed funds rates are. You keep an eye out for all these things, and at the end of the day, follow the price. If you're a trader, all these things doesn't really matter because you're day trading. If you're in the trade for 5 minutes, not even 5 minutes, looking into all these things, is it going to help you in any way? No. Is it going to make you any money with SPY call options? No. What makes you money? Price. So just follow the price. All these things are only important if it's good for speculating. I'm just speculating at this point. I don't know what's going to happen with these, but I know how these things work. But these are just speculations at the end of the day. Knowing all these things are good, fun for having a discussion, it makes me sound smart, isn't it? That's all it is. Other than that, it doesn't really matter. Focus on the price. So 10-year yields, as I said, looking good for another push higher. They might use CPI as the reason to either test these highs at 3.9 or get rejected and make a new low to the downside. Something to keep in mind. Now, after this, we saw Dixie, we saw 10-year, we'll go over TLT. TLT is the bond space. The bond space is also looking for a pullback here. They can come all the way down to $100 to the downside or $99 to the downside. $3 more move to the downside, which puts the 10-year or 20-year yields to that 4% mark. I will be a willing buyer if they hold this $100 in TLT from a bond space for a longer term, from a longer time frame perspective. $99, I would be a buyer. The only risk to this is CPI coming in way harder, and then they use that as a reason to sell off the bond space and push the yield space higher again. When talking about bond markets, we got to keep an eye out for those things, because I'm talking about something, investing in something for a longer time frame, because these are bond markets. We got to keep an eye out for all these data which is going to come out, no matter how skewed they are. But 99 is important to me, and as long as they stay above it, I like TLT. If I draw an AV wrap from the lows right over here, it puts us right at around that 102.50 to that 99 area. So this might be a buyable pullback. I'm interested. So it might be just another low, higher low. If they hold on to this 102.50 and then start bouncing, the ticker which I'm looking at is TLT. So I like it at 102.50 with stops at around 99. So I'm risking $3 on this trade, and it's a long term, and I'm trading it all the way to 110 to the upside. So risking $3 to make around $7.5 to $8. It's around 2.5 to 3 hour at the end of the day. So I like it. So let's see how it goes, because the CPI can move these much crazier than they can move S&P 500 or Nasdaq as a whole. So with that being said, if you guys have any tickers right now, we went over all the macro nonsense, and we went over S&P 500 and QQQ, and we spoke about how there is no decision, no signs of trend change. It's either bullish or bearish when it comes to market. We spoke about all that. Now, if you guys have any questions, go ahead, let me know. And one more thing, I've been looking in the chats, like, what's going on? Will stocks be bullish? I know nothing guaranteed and want to have some perspective on it. Oh my god, these guys, man, I have no fucking idea. It doesn't matter. You'll see, like CPI, you can do a coin flip right now. That's all you can do. You do a coin flip. If this happens, this will happen. If this happens, that will happen. That's not how market works. That's really not how market works. If it's that simple, everyone will be a billionaires right now. So, I mean, I'm done arguing with these people, to be honest. Alright, now, let's go over Ford chart, please. Let's go over Ford. If you guys have any tickers you want me to go over, drop it in the comments. Right, so let's take a look at Ford. So, okay, that is not a good looking chart at all, to be honest. They broke both the AV VAPs. They broke the AV VAPs from the low, which is currently sitting at around $12.86. I am not a big fan of buying this as long as they retake it back. They also closed the week under that range, which is pretty important to the upside. Now, watch out for 1244. If you're still long on Ford, watch out for 1240 to 1244. I'm not interested in taking any long positions in Ford as long as they get above $12.80. It's not even something which I would touch. I have a rule when it comes to trading: if they're under the AV VAP, the sentiment is negative, don't touch it. I wouldn't trade it to the long side. I don't like to go bullish on charts which are downtrending. I don't like to trade downtrends. There is no risk defined trades over here, so waste of time, waste of money, no risk to reward. If you want to take a risk defined trade, you can wait for $12 and you can take the trade over there all the way to around 1273. Again, for a stock with 54 cents caliber, if you put your stop losses at 20 cents and you're making 60 cents at the end, it's a 3-hour trade. So that's something you can do. Right now, I would just wait for the stock to see which direction they pick under 1280. I would just honestly wait for the stock to hit all the way to $12 before taking any trades on it, to be honest. So let's see. It's not looking good. And if we add moving averages to it, let's see. Let's see where the moving averages are. I'm pretty sure they're going down under. There we go. They lost all the moving averages on Friday with that nasty sell-off. Monday's open is going to be really important. If they open under all these moving averages, well, $12 is pretty simple to get. The weekly charts, again, another terrible close. On the weekly side as well, they lost to 200 they rejected the declining 200 SMA and declining 50 SMA. They broke the 20 SMA as well in the weekly. They lost the 9-day moving average as well. All these are not a good sign if you are a bull in this stock until proven otherwise. So now that being said, Tesla. Okay, Tesla it's an interesting setup. 208 was pretty important, and then the bulls said nope, and bears just bounced immediately. That's a nasty sell-off. And if you go to the weekly charts, always start with the weekly charts to get a broader time frame, right? So Tesla, let's talk about it. I'm pretty sure most of you guys were bullish after 208 has been taken and then got absolutely whacked on Thursday and Friday. I understand that, but the thing with Tesla, let's go to the weekly charts first. You can see from the weekly charts, the 208 area is very, very important. Tesla could have broken that 208 on a daily time frame, in a 15-minute time frame or whatever it is. Did we have a daily close above 208? No, we didn't. Did we have a weekly close about 208? No, we didn't. Even if you did go long, let's say here we go. Let me go to the smaller time frame. This happened on Thursday, right? Tesla had a massive breakout of the 207, went all the way to 214, and everyone was so bullish, oh, Tesla is gonna go to 220. Is it? No, because they didn't close the daily above it. But you can see what happened. They tried multiple times over and over, and at the end of the day, they just sold off and they just gave up. Look at where they gave up at. When I tell you 208 is important, this is what I mean. You can literally see it happening in the chart. This is a 5-minute chart. You can see at the last 5 minutes what they did. Pretty interesting, isn't it? They tried to break above it, 208, in the last 5 minutes. They said nope, and they sold off and they closed under it. And you all saw what followed the next day. They followed up with a big gap down. Nasty gap down. They lost not only 198, but also they lost not only 200, but also lost around all the way to 198, and now they are holding on to this AV VAP at 193 and change. Something to learn about Tesla. Stop chasing. All right. So if this stock has run like 100% in the last 1.5 months, not even 1.5 months, 1 month and 10 days, literally. Why would you chase buying calls in these types of stocks? Wait for the Tesla to at least pull back to 179. There's your trade. there is a potential move to the upside waiting for you. So 179, you can take the trade again, potentially, provided there are buyers sitting over there. If they get back all the way to 179 to run a test to these support levels, you can take the trade again to 198. It's a 20-point trade with a 2-point stop. Now that's a good trade. Chasing here for $1 or $2 for scalping here and there, why do you want to waste your money on taxes? It's not even a good risk to reward. For $2, $3, how many times are you going to take the same trades over and over? It's not going to be helpful in the long run at the end of the day. So that being said, if you're going to trade Tesla, if you're a bullish on Tesla, wait for Tesla to pull back at least to 179, at least to 180. That's going to offer some good risk to reward trade to the upside, playing the bounce. So now, with that being said, we saw the weekly candle. They couldn't close above 198. They couldn't close above 208. Leading into next week, 198.41 and 208 is going to be a resistance again if they try it again. So now for support, watch out for 178 to the downside, 178 to 180 zone to this 178 to 180 zone to act as support. You might find some buyers around that area because that is the AVWAB from the COVID crash. So with that further said, if you guys have any questions, let me know. This is what I think about Tesla. I'm not bullish here. I want some sort of pullback at least all the way to at least to 178, at least to 178 for a risk-defined trade. So as long as they hold 179 to 178, that's good for you. If you're a bull, that's good. You need it. You need a pullback. You need a cool down from the stock. You need a consolidation before making the next push higher. Having a melt up like this, it's no good for the bulls because when they sell off, it's going to crack. It's going to crack hard. We don't want that. So now, HIMS, HIMS. My friend was obsessed with this stock, to be honest, in my Discord. I think this is one of his longest positions, and they had one of the beautiful closes this week. I love this stock, to be honest. I love this company, and this is the beautiful looking chart as well. So you can see weekly chart, and they broke out of the range. This was the range which they have been trading out, and it was also a new 52-week high as well. Interesting. So as long as they're above 940 next week, watch out for the next leg higher, all the way to $10 and all the way above to run a test again to 11, or who knows, all the way to $15. We never know. Buckle up because this is a good looking chart. These are the type of charts which you need to be holding your long positions on, not bag holding downtrending stocks. That's not how we trade. That's not how you make money. Oh, it's a good company, it's gonna come back. Tell me one stock, all right? The trend tells you everything you need to know. It's a good company or not. How do you know it's a good company? Oh, I learned the earnings report. Then why the market didn't like it? I mean, either you're wrong or the market is wrong. But markets are never wrong most of the time. So the best thing to do is just follow the trend. And if you follow the trend alone, you can save a lot of money. The only thing which I recommend buying and holding forever is SPY or QQQ. Other than that, if the trend is not in your favor, get out of it, re-enter once the price gives you a confirmation. You need to wait for the price to give you a go before buying blindly or before dollar cost averaging blindly into any of it. That's how you get whacked. Same with these penny stock, folks. I don't know what the fuck is going on. Like, the stock moved from $3 all the way to 60 cents and they're still buying it. Like, it's almost like 95% down, like from $3 to 65 cents. What's wrong with you guys? That's not how you trade. That's not how you do anything. It just pissed me off, to be honest, to see all these trades being posted in the chats. But hey, I mean, multiple traders, multiple ways to trade. But I mean, what the hell? Trade up trends, manage the risk, you'll make money. If you keep dollar cost averaging on the down, or dollar cost averaging over and over and over, all the way from the all-time highs to the down, tell me how many stocks recovered to the highs. Netflix, if you got started buying in 2020 highs or 2021 highs, where is it now? Meta, where is it now? Apple, nowhere near. Tesla, no fucking where near. So I'm telling you, just follow the trend. It doesn't matter if you love the company. Wait for the price to give you a go before starting to buy into it. Because price pays. You can have whatever opinion you want about the company. Doesn't matter. If market disagrees with you, listen to what the market is saying, take a step back, analyze whatever you're doing, manage the risk accordingly. That being said, HIMS looking bullish, good looking chart right here. Breakout last week, as long as they stay above 813, you can set your stops over here, 813 and change. If they stay above it, we have a next leg higher. How much higher they can go? I'm talking about longer time frames. I'm not talking about these one week or 2 week options. We're talking about some good trades here. So 1136 will be the next big resistance to the upside, followed by 1250. It's going to be a decent trade to catch, to be honest. So HIMS, good looking chart, good eyes. Tesla we already covered. ENPH, oh, another fucking oh, I'm sorry for swearing, another disaster, another nasty looking chart. You know, I got absolutely taken out to the woodsheds and got shot twice in the head. You know that, right? I posted it in the chat and you guys must have seen it. I tried longing ENPH. I tried buying calls on ENPH right over here, around this 236 234 zone, because that used to be an important area of support multiple times over and over. So now I thought of going long right over here, the same zone, 236 to 234 area. Got slapped immediately right across the room. It literally took me like 3 minutes to get stopped out and lose $300. Quick, in, out, hello, goodbye sort of thing. Had it held, my initial plan was to hold on to these calls all the way up to 260 to 265 to the upside. So technically, I'm risking like $5 to make around $60. So we're talking about 30. So from 234 to 260, we're talking about $30. We're talking about a 6-hour trade, risking $5 to make around $30. That would have been a massive trade if it worked out, but unfortunately it didn't. But they did continue to sell off into the weekend. So now with ENPH, as long as they're about 203, you have your risk defined over there. If they break under 203, watch out. They can come all the way to 180 to the downside. Something to keep a note on. Alright, so with that being said, ENPH above 230, bullish. And as long as if they break under 230, watch out for 182 and change to the downside. Right, so next one, Netflix. All right, another stock which is on a steady uptrend on the secondary trend. So let's see. Netflix weekly, again, too high, too far, too fast. Another example for that. Wait for a pullback at least to 330-ish, at least to 330 to 337. If they do offer it, and if they do offer a bounce, well, there is your entry. And at least for a short-term trade, that is. So if they don't offer a pullback, you wait. You don't chase here, because look at let's calculate this just a minute. You can see it from here, from 280 all the way to 279. Straight up, no sell-offs, nothing. Straight up, 40% move. In 1, 2, 3, 4, 5, 6. In 6 weeks, we got 40%. Better wait for a pullback to happen, and at least to, like we're talking about, at least 330. And if they come back all the way to 280, even better. So nothing is going to change technically as long as they hold on to 330 and start bouncing. It'll be just another higher low. So this is why I say, I mean, if you are looking into, if you're talking macro, and you're talking like recession is coming, the market is not going to go up, you would have missed for a move from $160 all the way to 380. And that's almost doubled your money. That's almost 100% move. That's insane move. That this is what you get for not trusting the price and just blindly going over something which you don't understand what's going on. Tell me about this. How many of you guys actually know what CPI is? Do you know how it's calculated? I am pretty sure most of you don't. Fucking hell, I don't. I don't know how it's calculated. I'll do what I do. I'll look at the headlines. I'll see the numbers. and I'll go to the Bureau of Labor Statistics website, I'll download the data, and I'll read the report. I'll compare it to the previous report. Do I know how it's calculated? No. Do I know what formulas they use? No. Do you know which index they weigh the most in the CPI to calculate to get to that 0.5 or 0.6 readings? Absolutely not. And if you don't know any of this, why will you even put your any effort into looking into it or put any emphasis on it? It doesn't even matter. You don't know what's going on. It doesn't matter at the end of the day. But you don't know technical analysis. You don't know how to analyze the price. The price is going to tell you everything you need to know. CPI did go up higher for the 1 month, and you can see the price. You can see like literally over here, 165 to almost 370, 128% move. You would have missed it if you stick your head so far up into the macros, but you wouldn't see things clearly because there's a lot of noises out there. There's a lot of things which you don't understand. I'm not an economist. No one in our Discord is an economist to actually give you any advices, any real proper advices on what's going on with the macro. Stop listening to these people who's trying to scare you, who's trying to pretend like they know what they're talking about. So because at the end of the day, no one does. So just focus on the price, because at the end of the day, that's all that matters. It's easy for you to learn technical analysis than go deeper into these macro. Most of these macro people, even the economists, don't know what they're talking about. One bank says the S&P 500 is going to fall 20% because of this and this. The other bank says the S&P 500 is bullish and it's going to go all the way to 4,400. Who will you believe? Even they don't know what they're talking about. It's just a speculation at the end of the day. You can't trade based off of speculation. You can only trade based off of price at the end of the day. With Netflix, watch out for 330. Watch out for a pullback to 330 to the downside. If they break under 330, we can get all the way to 280 again. This is the weekly charts. Let's go to the daily charts. You can see even more clearer picture. There is a gap which needed to be filled all the way down to 315 to the downside. If they break under this 330 area, they're going to do that. They're going to fill this gap quick. Once they fill this gap, if the price didn't move, watch out for 281. If you want to buy Netflix, these are the potential areas. 280, I like it more. 254, I love it. If they give me 254 and if they hold this level as support, it's going to offer some beautiful trades to the upside. Until then, be patient. Wait for some sort of a decent pullback. We moved like 128% from the lows. It's okay to have 20% pullback from where we are at right now. Nothing is going to change. So that is with Netflix. Write these numbers down. So 330. And the gap fill all the way to 315, and if they break it, watch out for 281 and 254. Now, sold the truth heard. Yeah, I mean, it's not my intention. I know most of you guys are new to the markets. I just want you guys to just focus on one thing which actually matters. I've been in Chris Saint's Discord, and I'm running my own for like at least 3 or 4 years. I know the audience. I know my audience who I'm talking to, and I know how easy it is to you guys are here to learn. I want you guys to do it the right way. That's it. Don't fill your mind, fill your brain with all these It's good to learn about macro, but how can you trade with it? How will you trade with it? No, you can't. Is it gonna help you with entry and exits in SPY? Or are you gonna say, oh, CPI came out here, so I'm gonna buy 408 calls in SPY expiring today? No, you're going to look at the charts and you're going to say, okay, I'm going to buy calls at 408 because SPY is at support. That's how you trade. If you're trading in and out, which is how most of you guys trade, doesn't matter. It doesn't matter what's going on with the macro. They're going to report one right now, and then in another few months, they're going to come up and either revise it to the upside or to the downside. It's not trustworthy, and it's not even worth our time to even look into it. That's all it is. So that being said, next, sold my hymns in 7s. Thanks for the TA. I'll look for re-entry opportunities in coming days. Yeah, it's fine. I don't know why you sold it at 7s, but when it was at 7s, let me see. Okay, I see what you did. You didn't wait for this breakout. You got it before the earnings. I mean, it's fine. No worries about it. So wait for the earnings. They have earnings at around 27th of Feb. Let's see how the price action does. If they do keep pushing higher and if they do offer a pullback after the earnings, it's going to be a good entry opportunity for you. Baba, let's the Chinese. Right, another terrible week. If you notice something, most of these companies which rallied like crazy from the down almost lost most of their gains last week. Most of us got absolutely taken out of the wood treads if you're long the markets. So right now, the Baba 101.41. This chart is an absolute gap fest. I'm not even going to go over gap fill because if I start talking about gap fill, you'll be asking which one, because look at this. Gaps after gaps after gaps. This is the chart which has almost 100 to 200 gaps which is not filled so far. So I can't even go to like which gap to start over with. So let's just go with, that's the main reason why I stay away from this Chinese stock, even from trading these Chinese stocks, because I do keep an eye out for the Hang Seng markets. They open at around 9:30 in the night after we close. So it depends on what they does, or it's going to move these stocks again over and over. They're going to have a big gap up or a big gap down if they have any news over there in Hong Kong. So too much uncertainties for me to even touch it. If you are trading it, watch out for 101.56 all the way down to like the $100, which is a psychological area. If we break under it, they can come all the way down to $93 to $94 to the downside. This is not something which I would personally trade, but if you're interested in it, manage your risk. So trade it carefully. If I draw the AVWAP from the lows, I won't mind getting a pullback at least to $86 here. If they pull back all the way to $86, I might consider some positions with risk-defined trades to the upside. But I gotta wait. You gotta wait and see. So if you draw an AVWAP from the all-time highs, this is another example for not dollar cost average. Baba is a great company, bro. It's the future, bro. P ratio, bro. My P ratio, my ass. If you start buying it all the way from the upside right over here because of the PE ratio, well, you are down the hole almost. 324 is the all-time highs. Right now, we are sitting at 102. You are so down the hole. Macro is not going to pay you. Fundamental, if only fundamentals pays you, right? The price tells you everything you need to know. Long term or short term doesn't matter. Now, the AVWAP from the highs is still sitting at 147. Well, still a downtrend, a nasty downtrend. But the price secondary trend is slowly showing some sort of strength to the upside. So keep an eye out for it. 105. It's a strong resistance. If they break above it, watch out for the highs at 120 again. I would wait for at least getting a pullback to $86 to $87 to buy it again. So because they moved quite a lot, quite so fast in the past few weeks, it's pretty common for markets to pull back, reset, and then fire up again by printing another higher low from the secondary trend point of view. So with that being said, what's going on with Apple? I know most of you guys trade Apple as well, so we're gonna go over Apple. We're gonna go over Google, which got absolutely destroyed last week. Those are the last two stocks which gonna go over, and we're gonna call it a day. So Apple, 150, 150, very important. Look at this, similar story. Too far, too fast, not good. Good for a consolidation or good for a pullback. Expect a consolidation or expect a pullback. It's pretty good. Look at this. 26%, 30% on the last 1, 2, 3, 4, 5. Last 5 weeks, it ran 30% to the upside. It is pretty common for the stock to either just pull back and do this 130 to 150 to 157, back and forth, and not doing anything for the next coming weeks, and just consolidate and then make the move all the way to this trend line at 168. Possible. But if they break under 150, I won't be surprised to have a pullback all the way to at least 141 or 138 to form another higher low. Once the higher low is formed, you can buy it over there because a pullback is healthy. Technically speaking, let me draw it out. This is a low, and once the low is made, they made all the way to the highs of 156, and if they come back down and hold 141 to 138 as support, this is going to be another low, but this will be a higher low compared to the lows which we have over here. So that is bullish in the secondary time frame, secondary trend. We have two types of trend here. Primary trend over here, which is in a downtrend, still in a downtrend. Secondary trend is showing some sign of bullishness. Right over here you can see. So now, if they do break 150, I would wait for a pullback at least to 140 to 138 to the downside. If you want to buy Apple for long term, you can take a risk over there with your stops set. Of course, don't go without a stops on, regardless of how long your time frame is, regardless of what it is, and I would only recommend investing in a stock without, I mean, not a financial advice to you, but still, if it was me, I would only invest in SPY or QQQ without any stops on, because historically speaking, SPY and QQQ always goes higher. I have receipts, I'll show you. Here you go. This is the monthly charts. Alright? So, here, 1993, 2000, dot-com crash. S&P 500 dropped 90% of the highs. The highs of S&P 500 before the dot-com crash happened, right over here. The SPY was trading at 153. It dropped as low as $80, or no, sorry, as low as we're talking about $80. It was almost a 50, 60, 70% drop from the highs. You can see it right over here. And then what happened? They pushed all the way up again to 160, and then they fell again, this time to 67. That was the financial crisis, 2008. Again, what happened later? They pushed up and up and up. If you just bought it even at 150, 157, you got the peak of the financial crisis. You got FOMO and you bought it at 150. Where is SPY right now? 408. Market always goes higher, regardless of what it is. SPY and QQQ in particular, those are the only stocks I would personally hold, regardless of what happened, regardless of how many years I got to do it. The only two that I would hold long term. I don't have to look at anything, because these indexes rebalances itself, because in 2000s there's no Apples, there's no Amazon, there's no Netflix, there's no Google. The leaders were completely different. So when are you buying SPY long, how many weeks do you recommend? Again, I'm not talking about short-term trades right now. This is about investing in index funds. So if you want to buy something and hold it forever, SPY and QQQ will be my go-to. Now, to answer your question, when you're buying SPY long, how many weeks do you recommend? Again, depends on the setup, depends on the trade, and depends on the risk to reward. If I'm just scalping, how do you even trade this range? So 408 to 417. There are three ways you can technically trade this. Every time SPY hits 408, you can keep buying calls, you can keep buying shares with stop losses at the breaking candles under 408. And if you're a bear, you can keep selling short at 417 to 415 every time the SPY tests over that area, with the anticipation of SPY breaking under 408. If you're a bull, you keep buying that 408 over and over and over again, with an anticipation of SPY breaking out of 417 to 415 area. Or you can just scalp, buy calls at 408, sell it at 407. Sorry, to sell it at 417. Buy puts at 417, sell it at 408. There are three ways to trade this. So either way, your risk is defined. This is why the choppy and consolidation type of markets are the easiest markets to make money off, because you exactly know the range which you're trading, you exactly know the risk which you're making, and at the end of the day, that's all that matters. You know the risk, you know how much you'll make, you know how much you'll lose, and the time frame of those trades. I would recommend at least like giving it a month or two before getting into any trades at the end of the day. Again, it depends on your account size, it depends on the risk which it depends on the hours which you're risking, depends on your stops. This is not, you asked me a broad question which doesn't have a single answer. I can tell you I pick expirations of 2 to 3 months out for a trade. That won't be the same for your account, because your account size will be different to that of the mine, and what you say won't be the same for other people, because their account won't be the same as yours. As I always say, Don't risk more than 2 to 4% of your portfolio in one trade. And if you get stopped out in 2 trades in a particular day, stop trading. And if you stopped out in like 4 trades in a particular week, stop trading for the week. Manage the risk. It doesn't matter what your expiration is. That's all matters at the end of the day. When I'm buying SMI long, that's what I recommend. Manage the risk. It doesn't matter what my expiration is. It doesn't matter what others' expiration is. You do what's best for your account. So, if you guys have any other question, let me know. If not, we will sign off right over here. Yeah, leave a like, subscribe. Go ahead, do it. I would really appreciate it if you guys subscribe to the channel. And I'm not going to post any new videos for this week because the last week's video tells everything which needs to know, because nothing has changed from the last week's price action. It's literally the same from the last week. We're still in the choppy market. We're still in the range bound market. Nothing has changed particularly. So we will go over it. If something changes, I will update you guys accordingly in the Discord. So if nothing changes, there is no need for a new update. There is no need to clutter bullshit to get views. So with that being said, thank you so much for joining. I'll see you guys in the server.